So thank you so much. We'll try to make it as interactive as possible. But before we start, I wanted to kind of set the stage. And we've been seeing the financial sector evolve, and I wanted to share with you a bit of a perspective. What we've seen is the banking 1.0, more brick and mortar financial services, lasted for nearly 500 years. We didn't really see much change happen over the years. And then we transitioned into 2.0, where telephone banking was seen as the biggest innovation of the financial sector. And that lasted for about 300 years, 30 years that we see how it's evolved. Then we transitioned into more online banking, which is what I've termed as banking 3.0, and how we've seen this been evolving. And now we're into this era of banking 4.0 or financial services 4.0. So I think the experience era, and that's what brings us to the topic of today, the customer experience, and the many topics we'll talk about today. But I think I just wanted to start off by seeing the customer touch points and how they touch the financial services industry and how the customer experience can be enhanced. So let me start with you, Sourabh. I think what are your viewpoints, and then open it up to the panel as well.
Sure. So first of all, thank you for that question. It's a very interesting question. I come from insurance industry. I've been in the insurance industry for the last 15 plus years. And it has changed. I mean, when you look at customer experience and the role of technology, I would say it has been definitely a positive trend, I mean, across the value chain. So looking at the insurance value chain itself, I mean, when you look at it, I mean, essentially there are 2 points when a customer gets in touch with an insurance company. One is when they're buying a policy, or the second is when there's a moment of truth when there is a claim in reality. And in between, there is hardly any touch points. Now, when you look at those two, technology plays a very important role. And especially when you look at product selection, like looking at the product selection advisory in terms of, we just talked about robo-advisory in financial institutions and banking, but also within the insurance industry, advisory becomes an important role. And also when you look at a customer experience in terms of, earlier, like you were mentioning about 2.0, when we talked about customer service call centers, now even that has evolved. And what I mean by that is now we are looking at technologies like sentiment recognition, where when a customer calls in, you as a call center agent would be able to recognize, what is the sentiment of the customer, and then provide an advice accordingly. So there are these facets which are evolving, but at the same time in the claims, like in the past, it could take you like 2 weeks to get a claims process. Now when you look at it with the use of AI, with the use of IoT, with the use of data analytics, you can actually get a claims process within 15 minutes. So, I mean, there is definitely a huge impact when it comes to the whole value chain of insurance industry and customer experience. And also there is a huge element of personalization which is going on. Based on the data which is available for the customers, you can actually go into recommending the products, looking at retention, what drives the customer, improve your retention ratios. Because when you look at cost of acquisition is much higher than retaining a customer. So that's where I think that these are multiple facets where we do see an upward trend when it comes to the role of technology in customer experience.
Well, thank you, Sourabh. So, Arjun, let me turn to you. Do you think technology, customer experience, banking 4.0, is it overrated?
I think you're asking the question which we discussed outside, right? My honest view is it's there, but it's not yet really there. And I still think there's lots of potential in 3.0 itself. technology is a fast-changing landscape, and like the speaker before us said, the hardware, I think, is very underappreciated, and software keeps changing. I think by virtue of that, if one really looks at 3.0, I honestly think as an industry, we've just scratched the surface. And why would I say that? Let me play it along with technology and say when we started off, and again, I'm picking up some keywords from his presentation, APIs is no longer something new. But blockchain, right? I think, and people confuse blockchain with crypto. To be very specific, they are very completely different things. It's just blockchain is a technology and a tool, and crypto is an investment or a digital asset class. But blockchain has opened up the world to a lot of possibilities. But the reality also is that it's not something which you do for any and every solution. You have to have a very complex problem. But when you bring that complex problem into a BFSI space, it can potentially be taken up, and I'll give a use case. Again, the previous presenter had anti-money laundering, and that's what I'm currently into the space of financial crime. I individually think that across the industry, if we can share data, of course, with data privacy controls around it, it can really become very, very effective. 4.0, very early days. I think there are 3 categories of clients, if I'm going to call out. One, which still like the physical touch and feel, want to go to a branch, have a conversation, probably my dad's age, right? Then in the middle will be somebody like us who would say, you know what, I'm happy to do a few things digitally, but for my investment, I actually want to speak to my investment advisor, right, without trying to get in there. And the third would be probably my son generation, who's 17, who will say, for investments, etc. also, why do I need to talk to somebody, right? I am very smart, unless they burn their fingers and then they realize they're not so smart. And that's where I think the augmented reality, which is 4.0, is going to really come in. It's a very clunky experience, but lots and lots more can be done in that.
Well, thank you. I think that's a very good perspective. So Orlando, let me turn to you. I think the question is more around now conversational AI. I mean, what is the role of that in terms of customer experience, and is there a role, and what are the benefits for that? So,
yeah, thanks. I'm going to be a bit controversial here because I think there is a lot of hype about generative AI and large language models. But the reality is we have to turn it upside down and think more about the customer and make it human-centric. And we have invested a lot of work in terms of making sure that we understand how customers interact through every touch point of the bank, insurance company, or any other financial service organization. And I think the most important thing, we need to be cautious about this technology, but at the same time, we have to use it for the right purposes. And what I like about the previous session is that they talk about responsible AI. And when having worked through with AI for many, many years, I can tell you that one particular type of model doesn't solve every problem. There's always a combination of different models, especially the ones that have been used in banking for quite some time that have been very useful, as are those that are about forecasting, prediction models, recommendation models. And sometimes you get into simple algorithms such as customer lifetime value. That's enough to be able to get a lot of good value out of the investment. And the other point that I want to make is that in having a good mindset for investment is important. And having a look at the impact that you're going to have on your customers is also of critical importance. And what technology is selected will be right, as you were saying before, it will be right for the right problem. One solution doesn't solve everything. If we go back to generative AI and conversational AI, there's going to be a lot of use cases that are going to give us a lot of value. But at the same time, there's going to be a number of implications. If we look at it from the point of view of BFSI, the first one is around transparency. So everything that we give back to the customer, everything that we give back to the bankers or the advisors, it's got to be fully explainable, and it's got to be fully traceable. We need to be able to go back to an auditor or a regulator and say, this is how this happened and this is why we recommended this product or service. And then the other aspect of it as well is it has to be used for the right purposes. And it has to answer the right questions. And we have to take the feedback loop into consideration. So every time that we deploy or release something that is going to use this kind of technology, we really need to test it. We really need to listen to the customers, and based on that, readjust the solution that we have deployed out into production.
Can I come on the traceability part? I think you made a very valid point, and I can share this. The regulators are looking more and more as to how and what the AI is doing. So you should be able to explain, and that's the questions we get asked all the time. If you have got the machine to take a decision on A, how has that decision come about? So you just can't say, look, this is the AI machine learning, artificial intelligence it's doing. That doesn't go well with the regulator. There's a European regulator, I'm not going to get into details, which actually fined a bank for using AI in financial crime space. And this is 6 months back. The bank took the regulator to the court. And guess what happened? The court asked them, can you explain what you do and why you do? And the bank was able to prove that. I think it will probably be the first case, at least in my history of over 2 decades, where a bank won a case against the regulator, right? And I think it just goes to the point, to what you're saying, that traceability is becoming very, very important. And again, that takes out the biases and ensures that whatever we're doing in the industry is doing from a responsible perspective.
Excellent point. So Sourabh, maybe let me turn to you, because we have different parts of the financial services industry. There's banks, there's BFIs, there's the insurance sector. Now, how does it relate to the insurance sector, and where is it in terms of its adoption of conversational AI?
It's a trend. I mean, that's probably what I would say. Conversational AI has been in use and across the value chain again. But again, most of the insurance companies are sort of looking at it from a perspective of what is the use case where I need to deep dive into, and what's the outcome I'm going to get out of it. So it's the business outcome driven decision, driven by the business strategy, as in, what does business want to achieve and how does AI help? I mean, and it could be conversational AI, it could be generative AI, or it could be neural networks. I mean, it could be anything. But at the end of the day, it's all about the outcome and the business case, what we want to derive out of that solution or the technology which we are using. Now, one of the things is, as we look at AI, what is happening is, especially in the risk, insurance is a risk business purely. I mean, it's about risk modeling, data. One of the facets or one of the prerequisites of a good model is going to be the quality of the data. So, and that is one of the biggest challenges which we always have as in insurance companies, that yes, we play with a lot of models, we have a lot of risk modeling available, risk assessment, but at the same time, what's the quality of data? So, we, back in the college days, there used to be that model FIFO, or garbage in, garbage out. So if you have good quality of data, I mean, the models are much better versus versus if you have a bad data, bad quality of data, that model does not prove what you use it for. So it's still, I would say there's a lot being used, but there is a lot of room for improvement as well. And like Arjun was saying, I mean, there is a lot of work which we can say that is going into it. There is definitely a potential. A lot of facets of insurance are being touched by AI, especially customer experience, especially in terms of personalizing the services, looking at what products you're going to buy, because insurance by nature, you could get buried into clauses and fine print and So the recommendation which comes becomes a very important part, and that's where I'm seeing there's a lot of usage. So it's evolving, and it's going at a very fast pace.
So you mentioned data. You know, data is, they say data is the new oil. So, I mean, does the financial services industry leverage data well at this point in time? I'd like to hear from all of you, because this is an area that when we interact with financial services institutions, that they're struggling to actually go to 1.0 on data. So I'd love to hear from you, from the panelists.
I would probably call data as now being the heart for any organization. I think if one looks at in the banking space, there is neobanks. That's the latest buzz, no longer the latest buzzword, but relatively newer. And they don't have physical presence. If I look at Standard Chartered as an example, we've got Trust Bank and we've got Mox. Trust is opened its physical presence one office, and that's more, I think, predominantly my own personal view, is to look at from a client perspective, the trust in the Trust Bank would go better if you see a physical brick and mortar. But coming back to your point, I think for institutions which have been around for a lot of time, data is there in different forms and shape. And the biggest problem is it's not structured, it's not connected, and hence you cannot really harness the power of data. Whereas if you are a relatively newer startup and you've set those operating models right in place, I think it can really help you to gallop. But at the same time, one's got to realize what is relevant today is not going to be relevant in 4 or 5 years, like you've shown for 500 years. Now we're down to a cycle of 10 years. I think data even will have a shorter sort of time frame around it. So lots is being done to harness data analytics. I think is the bread and butter for most of the banks, cross-sell, upsell, understanding your client needs. Facebook, sorry, it sounds like 1945, but you do a Google search on something, you come to Facebook, and before you know, they're all showing you ads of that particular thing, right? So they really use it well. That's a fantastic example. Banks have a lot of use cases where we use it well in terms of you've gone to a particular place, you've done a particular purchase, it was buy now, pay later. Those options come up because the clients get to do. I can go on and on. Again, lots is being done. I think only the tip of the iceberg has been scratched from a data perspective, and all organizations, at least in BFSI, are getting more and more dependent on data.
Orlando, would you have a viewpoint on?
Yes, I think data is something that I'm very passionate about. And I think data engineering is, if you guys like my personal advice, I would definitely invest in data engineering, because you can talk about AI, you can talk about data models and everything that you can achieve, but if you don't have the right data, it just doesn't work. So there is quite a few banks that are actually investing and are investing, especially if we look across region, and obviously European American banks, they have invested a significant amount of money to get their data right. And that is broken into a lot of different investments where they obviously got to a point where they have, in order, their data lakes, their data warehouses. But at the same time, they created an abstraction layer of enterprise services. And the reason why they've done that is because, as you mentioned before, it's very hard to get to a point where you have the same meaning and the same interpretation for what is a customer. For example, if you look at your credit risk systems, market risk, customer masters, and so on and so forth, they all have different meaning, different representation for your customer. And then to be able to unify that, you have to take it to the level of a canonical data model, and at the same time, you have to be able to expose it as a service so it can be used for the right purpose. And then at that point in time, data becomes really useful, and it's really fueling the enterprise, in the sense that it's connecting back to all your marketing platforms, it's connecting to real-time data engines, it's also connecting to your customer data platform. And at that point in time is what I have seen some of the fintechs and some of the financial service organizations doing it with a great purpose for the next level and the next generation of customer experience, because they are turning the experience into something that is proactive. So even before the customer goes through one of those interaction points and they go through a channel, whether it's direct or whether it's self-service or something, or through the contact center, they already anticipate what the interaction is going to be about, and they already have in front of the people that are serving the customer all the information and all the nudges of intelligence to be able to help them with that particular interaction.
Thank you. Sourabh, would you have a viewpoint on especially data?
Oh, well, like I mentioned earlier, data is the key. I mean, it's basically the oil which drives the industry overall, and the quality is there's a lot of investment being put into data science and data analytics in particular, right? I mean, in the insurance industry, I mean, we have relied a lot in the past on the EDW or the enterprise data warehouses, and they're still being maintained. I mean, and most of the large insurance companies, yes, we are slowly moving to data lakes. But again, with the regulation in terms of the data in motion or data in transit and store, so you need to look at those facets from a regulatory standpoint also when you take a decision around forming a global data lake solution or a regional data lake solution and things like that. Now, data, one of the things that what we also see is synthetic data is something which is also coming into forefront, not really to a large extent in the traditional players, but when you look at the digital native, like digital native insurance companies, and also the insurtechs, for example, you do see they're using a lot of synthetic data to be able to generate models, which helps overall in terms of the whether it is personalization of the experience, improvement of the efficiency, or improvement of the top line or the bottom line performance of the organization based on the models which are designed. So that's my thought on that.
Thank you, Saurabh. So let me shift gears a little bit. I think let's shift to AR and VR. I mean, what's the role of that in two things? I think one, communication within the financial services industry, and secondly, customer experience, to provide more immersive customer experience. So let me start with you, Arjun. I think what do you think is the role of AR and VR in these two areas?
Maybe let me start by a non-banking example, and this is something, again, sorry for the panelists because we spoke about it, but I thought, with the forum we should share, which is a non-banking, but it's a airlines industry experience. This is about a month back. Obviously, COVID is over, thankfully and hopefully. The family was on a holiday. I had to change my son's tickets. So I go to this website for the airlines, and I go and start chatting. And I put down the query basically saying, I need to change the travel dates for my son. There's probably 5-6 minutes, and 5-6 minutes is a long time of chat. And then after that, the bot goes and says, I really don't understand what you're saying. And I'm thinking to myself, in 2023, we're sitting, and if the bot can't understand a simple query of change the date on a ticket, how far have we come in this journey? Or how native are we, right? Now let me take that to banking. I think banks have done a little better, to be sure. There are bits around, if you want to have balances, if you want to know, you want to pay your bills, etc. It does get, so it's in a little bit of a better space. But again, it's just scratching the surface around it. I think, and again, it comes to data. When you sync that up with right quality of data, what one can do can be extremely powerful. There is a lot of pilots which have been done by different banks in this particular space to really see what and how can be potentially be leveraged. Analytics, I think, is a very good example, if you tie that close with VR and AR, that you can really make it personalized to a large extent and customizable. However, to get it to the next level, you've really got to be able to mix different sources of data, which is internally to the organization and externally, to be able to share a more holistic view around it.
Thank you, Arjun. So, Orlando, any viewpoints? I think this is how well it is being used in the financial services industry so far. Any lessons you've seen, learned from the work you've carried out?
Yeah, I've been across a number of use cases, especially across the global banks. They've done a number of things. The first one that I think is being successful up to a certain extent is in wealth, where they pretty much simulate the journey of a person that is investing, and they even show how the person ages over time, which is quite interesting. And that has really resonated with some of their customers. That's probably the most successful one. The other ones that I've seen is basically immersive experiences, where they show this is how it looks like when you go through one of our buildings or our branches. And then there is other ones that I've seen which they are using for training their own staff, front office bankers, back office, and so on. I would say overall, the success is limited. And I think, again, being a bit controversial, but I think banks, insurance companies, wealth organizations should be probably invest a bit more into how can we improve the customer service front, empower our agents in the contact center, empower our bankers, our advisors, and so on to be able to get guided experiences, and also to be able to have all the information about that customer right in front of them. If you work in one of those environments, it's very challenging. They have multiple screens in front of them. They have all sorts of data, and they are dealing with the customer right there and then. And they don't have any guidance, any nudges or information that are going to help them serve the customer faster and get to a resolution faster. So I think, yeah, it's all about, again, fixing the data to start with, and at the same time, creating a more customer-centric experience for those people that work in the front line.
Thanks, Orlando. So you spoke about fixing the data as one of the key impediments and challenges. So Sourabh, what could be some of the challenges if an institution wants to implement VR and AR solutions? What do you anticipate some key challenges?
Few of them. Okay. So AR and VR, relatively new technologies. I mean, obviously within the gaming industry and also in personal life, we have been seeing a lot of AR and VR immersive technologies. Now, in terms of the implementation, one of the biggest challenges which I do see are the skills and identifying the right use cases, right? So as long as you're able to identify the use cases and you're able to convince the business in terms of, what could be the outcome, I mean, is there a quantifiable outcome which comes out of that, then you are ready to go ahead with an experimentation in terms of, where you can use AR and VR. Like in the insurance industry, what you can see is in terms of customer experience, when you look at the products, for example, and be able to see through immersive technology as to how the product can help you. Because products could be similar. And then if you're able to understand based on the model, that could be a good use case. So the first thing is identifying the use case, then getting the approval in terms of the business outcomes, the business case. And the third one, if you overcome those, then the third one, the biggest one, which I think in my view is going to be the skills needed within the organization. And that could be a massive challenge considering the fact that it's not the core prioritization for the insurance industry or financial services in general. So you will have to tap into resources which are working on cutting edge technology companies, and the chances of hiring those resources and retaining those resources is also a massive challenge. So those are the three main challenges which I see with the implementation.
Thank you, Saurabh. So I think coming towards the end, I think we are coming towards the end of the panel. But a bit of a more selfish question, coming from the development finance world, we are seeing how technologies, AI, VR, AR, machine learning can play a role in inclusion for example, underserved segments like SMEs. So do you think there's a role of such technologies in enhancing inclusion of financial services? It's a question for any one of you, if you like to. Arjun, if you want to start.
I think the short answer is it's a resounding yes. And let's jog our memories to 2 years back when COVID was there. I mean, even if I look at, I'm not talking of financial inclusion from an inclusion perspective, I think the world would have come to a crisis in COVID if the banking system was not digitized. Imagine if we had to get cash out of the ATM to be able to do whatever we could, not digitally, right? I mean, to me, it's a scary, scary thought. There are a lot of apps which are helping the underserved from a microfinance perspective. I think technology is a very, very big enabler in that particular space. I think there's a lot of people who don't have credit histories, but that's where technology helps to be able to give loans, for us to come to a decision as an industry on loans, which $50 for any financial institution is not big, but from a microfinance, that's the average ticket size around it. And Asia, I think, brings the maximum opportunity, where if we can really harness the technology, that will really give us fantastic results.
Thank you, Arjun. Sourabh, Orlando, any
I think I'm 100% with you. Because if we break it down into 3 parts, let's talk about the front office and the kind of things that happen there. Definitely AI, ML has already been doing this for some time, but they also have the potential of doing even more in terms of having that personalized contextual experience, depending on who you are, especially when you're trying to target those micro segments. And then when you move to the middle office, back office, and you talk about fraud detection, risk, and so on, it has played an important role because you can identify all the outliers, and then based on that, you can understand what is outside the boundaries of what you consider to be safe or risky within the organization. And then the last example is probably the way we have used it in the past to have predictions, recommendations, and basically to be able to match the fair products and services for any customer with what the goals and the direction of the financial service organization is doing.
Thank you. Sourabh, anything to add?
No, I would say it's already covered. So, yeah, I mean, overall, in the ecosystem, like what Arjun was highlighting in terms of, microfinance, similarly microinsurance, embedded insurance, I mean, that's where the inclusivity already starts coming in. And that, I think, is a very important trend as we look forward. So,
thank you, Sourabh. So I think we are at the end of the panel discussion, but let me ask each panelist a one-line final. We see many financial services professionals in the room and practitioners. So in your journeys, what has been 1 or 2 key learnings that you'd like to share with the audience as they undertake their journeys into these new spaces?
Never shy away from trying out new things. Let it be in a limited space. I'm not a big fan of doing things big when you start off. But technology is something which will always keep, I think, BFSI on its toes, and it should. And it ensures that we take a very mature and a responsible approach because we are responsible. We're a big part of the economy at the end of the day.
Thank you. Orlando?
Yeah, I think from my perspective is embedded finance, in the sense that we have to think about the customer outside financial services. And a typical example is one organization that I've seen being really successful is when they took the experience outside the purely banking finance side of things. If you think about someone who is moving house, they do a lot of different things. They find a moving company, they look at insurance, they look at wealth, they look at a lot of other things. Finance to be able to buy the property or rent the property or whatever it might be. And then if you look at the entire journey and you dissect it and you understand where you participate or where you can partner or where you can improve the experience and how, and then after that you look at the best technology to help that part of the experience, that's where you have a winner.
Thank you, Sourabh.
Yeah, for me, I definitely see embracing change is the most important thing. I mean, being open to change is definitely an important element. And the second thing which I definitely see is being able to balance the old and the new tech. I mean, there's always a buzzword around. There's always going to be a new technology. There's always going to be a new buzzwords, AI, generative, and list can go on. But I think it's important what works for your organization, what is where you want to invest in. I think that's the most important thing. Rather than being driven by the buzzwords, it's important to be grounded and see how do you balance your old and the new tech.
Thank you. And so, first of all, thank you so much. I think it's been a wonderful discussion, and I'd like to thank Sourabh, Alendo, Arjun for all your viewpoints, thoughts, and let's put our hands together for such a wonderful panel.